Hello there. Welcome back to Public Finance at 6. We are still working on the question paper of November 2024, and we are going to look at question 2 of that question paper. So this is our question 2, and our question 2 is financing capital projects from loans over a long period of time forces the present and future users to pay for and enjoy the benefits at the same time. Discuss the above statements under the following headings. So the first question is saying meaning of the term equitable financing. So you see that the meaning of equitable financing is the financial burden. It is explained within the financial burden of contribution in the form of taxes being progressive or proportional. So we have that meaning in our other section where the contribution to a project so that both the present they are going to benefit from the project. So basically this. So moving on to the second part of the question, is saying two disadvantages of financing projects from loans to present and future users. So it says that financing projects from loans, obviously, the disadvantage is going to be to come in the form of repayment, in terms of the repayments that are going to be made, and also the interest that also has to be paid. So basically, that's what we have. And then you'll see that also those projects that are being financed, if you try to compare the period of repayment and if the projects are still going to be in use in that period or not. Remember, some of the projects will become outdated during the period when the repayment is going to be made. Now that becomes a challenge again. So that becomes a disadvantage. So we are saying those disadvantages are stated in the other section, whereby you're saying the first one is future generations might blame previous ones for locking them into heavy repayments. So you see that we have got the issue of repayments that is there as a disadvantage. Then second point is saying this pay more for tax in order to pay loan and interest payments. So again, we are seeing that we have got again the element of interest payment coming in as a disadvantage. And then on the last part, this might result in a need for further finance to upgrade the project or the project becoming obsolete. So basically, this is what we have that maybe during the period of repayment, we may also need to upgrade the project. Of which it will not depend whether the project is still a viable project or not when we are still making the repayment. So basically, this is the last point that we have on this part. So moving on to the next question that we have, which is going to be our 2.2. It reads, our ministers and departmental heads are advised to exercise financial accountability and control when dealing with our public funds. So taking into consideration the above statement, do the following. 2.2.1, explain the promote accountability in relation to the functions of the annual budget. So you see that the budget reinforces accountability. Yes, we are seeing that under the budget, that's where we're going to have expected results and then are compared with actual results. So obviously, any variances that might be showing to be there, they can be easily be corrected. So at the end of the day, we see that a budget comes as an instrument that obviously try to reinforce accountability. So basically, those are typical explanations that we have in our answer section, whereby we are saying that the first one is the budget is an excellent instrument. That's the first point. The second point that we have to think, the budget may also be used as a reference when mismanagement is suspected or being investigated. So basically, we are saying that it is acting as a reference, which obviously is going to reinforce accountability. Then I'll move on to the next point. Simply put, when a department demands more money, the Minister of Finance has the right to stick to the budget. We are also reinforcing accountability. So we go on to the next point. And when the department does overspend, he has the right to take them to task by they overspend. And then we have also the last point. It is therefore a reference that may be used in demanding and executive officials within those departments. So these are the points that we have. So referring back to our question, you see that our question has got 10 marks. So obviously, at least 5 points will be necessary for you to get your 10 marks. So we go to 2.2.2, ex post factor control. So there is a difference that needs to be points that we have there, whereby we are saying a prior control, we are saying it means before. So prior means before, and these are descriptions laid down as to how and when certain programs need to take place. So that's a priori. And then we go to the second part whereby we've got ex post factor control, whereby X is out of, and then factor is facts, and then we have got post, which is after. So these are the meanings that we have here according to the part that we have on ex post facto control. Then we go to the direct translation is after the event who arise the facts. So second point is now explaining on the ex post facto control. They would need to evaluate the results of programs, projects, or and tasks. Obviously, this is going to be done after. So basically, this is what we have. Remember, on pure, it's transpiring before. So basically, the come as descriptions are laid down as to how and when certain programs need to take place. So basically, this becomes the difference that we have on 2.2.2. So moving on to the next part of our question, which is going to be 2.3. It reads, indicate only two institutions or persons to whom the administrative and executive bodies must be accountable. So we have them also listed here, whereby we have to the elected representatives in the legislature as one of them. We also have the second part, so whereby we have to the people of the country, and then also to the Minister of Finance. So these are the three that we have. So we go to the next part of our question, which is now 2.4, last part. So you see that we have accounting audits and also we've got performance audits. So on the explanation part, we also try to see what we have, other sections. So on accounting audits, we are saying this is an examination of the organization of financial information, which is conducted by an independent auditor. So you see that is conducted by an independent auditor with the aim to ensure that the information is represented fairly and accurately and according to standards. That is our accounting audit. So the brief explanation that we have according to our other section is saying a correct recording of finances, accuracy of financial statements, and safeguarding of records. So basically, this is this version that we have. And then on the second part, we have got performance audits, of which performance audits refers to an independent examination of, for example, a function. It can be procedures of a non-profit entity to assess whether the entity is achieving economy efficiency and effectiveness in the employment of available resources. So basically, that's the explanation on our performance audit. So we also have a brief explanation that we are given here, which reads efficiency, effectiveness, and economic performance of duties. That is in brackets of value for money. So basically, that becomes the last question that we have on our question 2. So I thank you for listening, and please stay tuned for more videos to come. And let's take note, more typical examination questions will be uploaded on this channel. So let's subscribe and share the video to all our colleagues who are doing a public finance at 6. And let's meet again in the next video.